Welcome to another edition of Trade Tech Thursdays, your command center for trading innovation. If data drives your edge, this episode will fuel it. This week we're going to discuss how AP has changed trading forever. Before APIS you needed a broker. Now you need a browser and code. That's it. When it comes to trading, a trading API gives you access to real-time price data and allows you to send orders and manage your positions programmatically. Basically, that means you can instruct a computer to place trades for you without manual intervention. I'm going to explain what APIs are, the real ways that traders use them today, show you some tools, and caution you on the common mistakes. For example, if you trade oil futures, you might want to monitor news about geopolitical conflicts in oil-producing regions or extreme weather events that could affect oil production or demand. An API can also be used to download historical data for a particular security. This can help you backtest trading strategies or develop new ones. Bad logic or poor error handling can lead to significant losses in a short amount of time. Make sure you thoroughly test your code before deploying it to the markets. Also remember that trading APIs are not a magic bullet, and they require skill and knowledge to use effectively. Don't expect to make millions overnight, and be prepared to learn and adapt as you go. For example, if you're a day trader who wants to test out a new strategy, you might use an API to download historical minute data for a particular stock. This can lead to unexpected behavior in the market and potential losses. It's time to dive into the code and start building your own trading bots, but where do you start? Always test your code thoroughly using backtesting or paper trading before deploying it to the live market. Another mistake is not handling errors gracefully. When things go wrong in trading, it's important to have a plan in place to limit your losses. This includes setting appropriate stop losses and implementing robust error handling in your code. Without proper error handling, a small issue in your code can lead to big problems. This will allow you to test your strategy over a period of time and see how well it performs. By scanning news feeds with an API, you can stay informed about these events as they happen and adjust your trades accordingly. Meet Gunn Webdriver. He's a self-taught programmer and successful trader who used his knowledge of coding and the markets to build profitable trading algorithms. After working in finance and learning to code, he spent 5 years backtesting and refining his strategies before sharing them with the world. Today he's known as the father of algo trading and continues to push the boundaries of what's possible with trading APIs. His story inspires me, and I hope it inspires you too. There are many tools available to help you get started with trading APIs. Some popular options include Alpaca, Interactive Brokers, and Tradier. Alpaca offers a free API with access to real-time data and order execution. They also have a user-friendly web dashboard where you can view your account information and trade history. Interactive Brokers has a powerful API that offers advanced features such as margin trading and short selling. However, it may not be suitable for beginners due to its steep learning curve. Finally, Tradier provides an easy-to-use API that's great for small traders and independent developers. They also offer a range of pricing plans to suit different needs and budgets. You can build a custom alert system that notifies you when certain conditions are met. If you don't want to rely on stop losses, you can use an API to cancel all of your open orders during a crash. This way you can avoid potential losses if the market takes an unexpected turn. Here's an example of how this might look in Python with Alpaca. We import time and alpaca_trade_API as trade. Then we initialize the API with our API key. Next we define a function called cancel_all_orders that uses the API's cancel_order method to cancel all open orders. Finally, we call the cancel_all_orders function. For example, you could have an alert set up that sends you a text message or email if the price of a stock falls below a certain threshold. Or if you're a crypto trader, you might want to be notified if the price of Bitcoin goes up by more than 5% in an hour. The API would then send you a notification whenever that happens, so you can decide whether to buy or sell accordingly. Let's jump in. Let's say you have a portfolio of 60 stocks and 40 bonds, and you want to keep it that way over time. An API can automatically sell some of your bonds and buy more stocks when needed, so you don't have to manually rebalance it yourself. So what is an API? An API or application programming interface lets different software applications communicate with each other. When you're using an API, you're interacting with a third-party system, but instead of calling customer support or reading through legal documents, you send messages and receive responses in a structured format like JSON, which makes it much easier to parse in code. Most APIs follow REST principles, meaning they use standard HTTP verbs like GET or POST and return status codes, so you know if your request was successful. Real use cases. Alright, now let's see some examples of how traders use APIs in the real world. You can automate rebalancing. If you trade with multiple assets, an API can automatically rebalance your portfolio to keep it aligned with your investment strategy. You can scan news feeds. An API can also be used to scan news articles and social media posts for mentions of a particular company or industry. You can cancel all open orders during a crash. And lastly, you can download historical data, tools, cautions. While trading APIs offer many benefits, it's important to use them cautiously. One of the most common mistakes traders make when using APIs is not testing their code properly. Now you know the basics and understand the importance of testing and error handling. Alright, it's time to wrap up. If you've enjoyed this episode of Trade Tech Thursday, hit a like and subscribe. And remember, every backtest is a rehearsal for the real thing. Run it clean, trust the logic. Until next Thursday, stay coded.